Hey, how's it going, everyone? Welcome to Finance with Avron. In this video, I'm going to give you an overview of the top 5 Fidelity exclusive funds for long-term growth and success. I've done a lot of research on ETFs, and for this video, I want to specifically zone in on Fidelity exclusive ETFs because they have a lot of great ones. Full disclosure, I own one of these funds, and I'm thinking about getting into one or two others, and I'll tell you about that in this video. Now, with these funds, you could definitely unlock high growth potential inside of your Fidelity account. And why, you may be wondering, why Fidelity ETFs? Well, the exclusivity of these, they're only available through Fidelity if you have a Fidelity brokerage account, whether it be, an individual investment account, a Roth IRA, traditional IRA, and so forth. These ETFs are not available on Vanguard, Schwab, or other brokers. Now, this isn't to say that those brokers don't have great ETFs of their own, because they definitely do. I'm in Vanguard VOO and Schwab SCHD, great ETFs. Now, one of the great things about these Fidelity ETFs are their low expense ratios. I mean, Fidelity offers some of the lowest cost funds in the industry across the brokers right there. I mean, there's one on this list that's at 0% and other ones that are under like 0.5%, under 0.2%. I don't think anything's above 0.2% on this list. Yeah, so very low expense ratios here. And also, Fidelity has a very user-friendly design on their mobile app and on their website. I personally use Fidelity. I have one of my investments accounts with them, and getting in and out of my portfolio, checking on it, putting in trades, all the data and everything there is great. I've rarely ever had an issue where I'm like looking for something and just haven't found it. I don't think so. I mean, there is a wealth of information on there. So if you're used to a real like basic kind of data about, stocks and ETFs, when you open a Fidelity, it's going to come at you a little bit more, but that doesn't mean you have to scour into it. That's one reason why some people only invest in ETFs and mutual funds, because they don't want to, do the stock picking and, reading, financial statements and looking at earnings and all that stuff. And that's totally fine. Me, I really enjoy that kind of stuff. So very easy to use, may seem a little bit overwhelming up front if you're kind of more of a beginner investor or something like that, but not something where it just looks like, a totally different language that you don't know, or some kind of dialect or something that, makes you want to close the app or something like that. I mean, I wouldn't think so. But now the benefits of these ETFs, of course, the low fees, the smart diversification, and the focused investment strategies with a record of great performance that can help investors maximize returns over time with growth and dividends. Now, I'm going to give you, of course, the information about each one of these ETFs, and I'm going to give you the performance of them 1 year, 3 year, and 5 year. And also I'll show and tell you about the top 10 holdings for each of these ETFs, because you definitely want to know what are the main holdings for the ETFs before you invest in them. There's a few things you want to look at for sure. You definitely want to look at expense ratio. You want to make sure they're not charging you a huge expense ratio for the ETF, because there are many ETFs out there. Basically, there's probably another one the same as the one you're looking at with the high expense ratio that's less than half of that or something. So definitely look into the expense ratios of any ETF before you invest in them. Fidelity exclusive, not Fidelity exclusive, any of that is what I would do personally. So yeah, definitely low expense ratios, which are great because then you don't have to worry about a lot of fees cutting into your returns. You have those high expense ratios, well, they're going to eat at your returns. Like even if you have double-digit positive gains or maybe high single digits or anywhere, no matter what kind of return you get right there, is high expense ratios will become noticeable. So expense ratios are definitely something I would look at. And also the composition of the ETF, just basically knowing a good, sense of what's in this ETF, what kind of funds. Okay, even if it's a, specific type of ETF, like a technology ETF, I still want to know what are the top holdings in an ETF, and if it's a broad ETF, like large cap, mid cap, or a mix of all those, I still want to know what are the main holdings of this ETF, because that's important information. You want to, just pretty much know that. So, like if you see a bunch of names on those top holdings that you have no idea what those companies are or who they are or what they do, you may want to do a little bit more investigation, research into those ETFs and probably specifically those companies as well before you put your money into it. So just one of those basic kind of things with research that I would look for in ETFs. Of course, there's more data than expense ratios, performance, and composition when it comes to ETFs, but I'm just want to focus on that because those are the main key aspects, I would say. There are definitely some other aspects you definitely look at. And this video isn't to say go and buy all these ETFs right now or that I'm doing that or anything. Now, I like to dollar cost average through the year, through the ups and downs of the market. However, when the market is taking a dive, when there's a correction, a pullback or something like that, that's when I try to invest more money into the stocks and the ETFs that I like. I just wanted to clear that up and didn't want this video to come off as saying like invest in all these ETFs right now. Now let's get into each one of these funds. First up here, starting with FZROX. This is the Fidelity Zero Total Market Fund. Now I do own this fund personally in my Roth IRA. The strategy of this one is to track the total United States stock market, including small, mid, and large cap stocks. The expense ratio on this one, 0, meaning it charges no management fees, which is a rare offering. Usually there's some kind of number where you look at expense ratio, sometimes higher than others. And I'll talk to you about that on this video, so I won't go into that again. But I think you know by now that I don't like high expense ratios. But yeah, this fund is 0 on that. Performance of this fund, the 1-year return is 15.79%. The 3-year is 16.57%, and the 5-year return for this fund was 15.30%. Double-digit returns across the board right there. Now their distribution / dividend yield, you'll see this kind of presented differently depending on where you're looking at your research for the ETFs and funds. You could kind of think of those as interchangeable somewhat when you see those. So distribution yield for this fund is 1.06%. So yeah, not a high dividend yield / distribution yield, but there's one on this list that definitely is more specifically focused on dividends and has a much higher distribution yield, but still 1.06%. I like to reinvest my distribution yields, dividend yields, and back into the stock or ETF. So that compounds, so that's an awesome thing. But yeah, why is this fund great? It has broad market exposure. There are no fees, which reduces the takeaway on returns, and it has a tax efficient structure. Now, this fund is ideal for investors seeking a low cost holding to build wealth steadily over the long term. Now, let's get specifically into the holdings of this fund right here. Now, the top 10 holdings for this fund are Nvidia, Microsoft, Apple, Amazon, Meta, Broadcom, Alphabet Google, Berkshire Hathaway, Tesla, and then Alphabet Google again. So they have GOOGL and GOOG. Main difference with those is the voting rights. GOOGL has voting rights, GOOG doesn't. So top 10 holdings right there. You see, very tech heavy. But, those are the major stocks that have been performing phenomenally overall in the past years. Some more than others, of course. Nvidia, Microsoft, more so than Apple in the past year. Meta's been doing fantastic. These are great stocks, great holdings, great companies. There's 2,607 holdings as of June 30th, 2025. So yeah, a lot of holdings in there. But you can also look at one thing that's important is the percentage of that specific holding in this portfolio. So as you see right here with FZROX, Nvidia has a 6.46 holding percentage of the portfolio, and then Microsoft at 6.17, and then Apple at 5.14%. So basically how you would think of that is that this fund has a higher percentage of Nvidia than any other company, and then next is Microsoft, and then it's Apple. Do they have more holdings of Microsoft than Nvidia? No. Do they have more holdings of Microsoft than Apple? Yes. So as the list goes down, as that percentage goes down, that means they have less exposure to that company because they don't own as much of it compared to the other companies they own. So yes, that is FZROX. Let's move on to the next fund here. That is going to be the FTIHX, which is the Fidelity Total International Index Fund. So the strategy of this one, it provides exposure to large and mid-cap companies outside of the United States, covering both developed and emerging markets. The expense ratio on this one is 0.06%. Very low expense ratio, especially for a fund that focuses on international companies. Because if you look around a lot on international funds and ETFs, you'll typically see that expense ratio much higher than at 0.06%. Now, the performance of this one, the 1-year return was 14.15%. The 3-year return was 12.20%. And the 5-year return was 9.15%. So almost double digits across the board, except for that 5-year return. Now the distribution / dividend yield for this one is around 2.4%. Now why this fund is great, it diversifies portfolio risk outside of the United States. And you have access to high growth international economies. Those are emerging markets. They're called emerging markets for a reason. Their economy is growing. US markets obviously have been performing phenomenal in the past years, and overall, over time, you zoom out, US, economy and US market does well. very well sometimes, of course. But, if you wanted to have a little exposure to international, outside of the U.S., maybe you think, oh, there's going to be some years the U.S. is going to be kind of, and other, countries are going to be performing better with their market. Or maybe you just want to just add it in there to a portfolio. Now, this fund is ideal for investors wanting to add that global diversification and capture the growth beyond domestic markets. Now, this is one of the funds that I don't currently have, but I'm thinking about adding it to my Roth IRA. Now, let's get into the composition of this fund. What are the top 10 holdings of the Fidelity Total International Index Fund? We have Taiwan Semiconductor, Tencent Holdings, SAP, ASML Holdings, Nestle, Alibaba, Novartis, Roche Holdings, Novo Nordisk, and AstraZeneca. So right here, you have a mix of tech / semiconductors / healthcare / pharmaceutical, large percentage of that. You see the percentage. This one has, way more holdings. I was going to say, I saw it start at 2.5% for the percentage of holding. And I looked over at the total holdings. Over 5,000 holdings in this fund. So a lot. So you see the percentages, even of the top 10, there's only 2 over 1%. The rest of them are under 1%. Further you go down the list, the less of a percentage still you're going to see with the percentage of that company and that stock in this fund. So this is the fund that I'm definitely thinking about getting into personally. Going to do some more research on it. And that is the FTIHX Fidelity Total International Index Fund. Let's move on to the next one here. That is going to be the FTEC, which is the Fidelity MSCI Information Technology ETF. This one tracks the MSCI USA IMI Information Technology Index, focusing on technology companies like Apple, Microsoft, Nvidia. Think of this basically as what it says in the name, the technology ETF right here. The expense ratio of this ETF is 0.08%, so very low. And actually, I compared this one to QQQ, Invesco QQQ, which is an ETF that I hold personally, which has been performing phenomenal since I've held the ETF. So this is actually another ETF that I'm thinking about starting to add into and have a position in. Maybe the amount of money I would put towards QQQ every month or so or something like that, maybe I'll split that in half and spread it across both of these ETFs. So that's what I'm thinking about doing. Now, the performance of this FTEC ETF, 1 year return is 22.26%. The 3-year return is 24.22%. And the 5-year return is 19.54%. Now that is the NAV total return and double digits across the board right here. But technology, that's where a lot of growth is. That's where a lot of gains have been happening. The past years, a lot of growth. And I definitely see that personally continuing to happen. Yeah, we're gonna have ups and downs for sure. Is this market a bit hot right now? Yes. Are some of these stocks in the tech sector pretty hot right now? Yes. Could they continue being hot? Yes. Could they come down? Yes. Could they go back up? Yes. But anyways, the distribution yield of FTEC is 0.44%. Now, why this ETF is great, the exposure to leading innovators and technology giants are here. That's the reason why you would be in this fund. You want that exposure to the tech giants, the innovators, and that potential for the high growth that's aligned with those tech trends and the tech giants. Now, who this ETF is ideal for? Investors with a higher risk tolerance seeking tech sector specific growth. Now let's get into the top 10 holdings for the FTEC ETF. Nvidia, Microsoft, Apple, Broadcom, Oracle, Palantir, AMD, Cisco Systems, Salesforce, and IBM. That is really interesting that Palantir is in the top. I mean, I know that stock has been growing like wow back, in the past couple of years. I remember when it had the SPAC and it was $10 when it came out. And then of course it went down and it was just dragging. And now it's like over $100 a share for that company. That's wild. But yeah, just to see it in the top 10 holding for a major ETF is like, wow, you really made it, Palantir. I mean, even outside this top 10, you made it for sure. But the earnings in that company, wow. But yeah, so that's the top 10 right there. So interesting, very interesting. And I'm just really curious. I'm gonna take you on a little tangent with me real quick. I want to just see the top 10 holdings for QQQ. Now I've looked at this before when of course I'm in QQQ, but I haven't looked recently. And I'm just curious to see if Palantir is in their top 10. So let's see. Okay, no, it is not. Just if you wanted to know, because I wanted to know, I was curious. QQQ, top 10 holdings: Nvidia, Microsoft, Apple, Broadcom, Amazon, Meta, Netflix, Tesla, and two different classes of Google Alphabet, GOOGL and GOG. Yeah, so similar for sure to FTEC, but you definitely have some outliers with Palantir and AMD. That's another one that's like pretty major for AMD to be in the top 10 right there. I mean, they've been doing phenomenal, that stock, in the past couple of months for sure. They were beaten down and have returned, not fully returned, but looks like it's on that way. And yeah, so I'm kind of seeing, yeah, that's very interesting. So I'm feeling even better about getting into FTC ETF because it seems like they have, definitely a different kind of, it's tracking a different index, of course. So you have kind of a different focus going on right there. But, when you think of a tech index, you think of some of the same companies. And of course, there's a lot of crossover in same companies here. But the QQQ is tracking the NASDAQ 100, and the FTEC Fidelity Tech ETF is tracking the MSCI USA IMI Information Technology Index. So, okay. Very interesting. Thanks for going on that tangent with me. Let's go to the next ETF here, and that's going to be the FDVV, Fidelity High Dividend ETF. Strategy of this one: invest in large and mid-cap U.S. stocks that pay high dividends. Focuses on income generation and some downside protection. Expense ratio of this one is 0.16%. So this is the dividend focused ETF on the list for sure. And the performance of it: 1 year return, 13.72%. 3-year return, 15.58%, and 5-year return of 18%. Distribution yield of this one, 3.04%. So yeah, you definitely have a higher yield with this one. And now, why is this ETF great? It provides regular income through dividends, and it offers a buffer during market downturns. Often when there's a market downturn, sometimes people go to safety, with their portfolio. They get out of the growth stocks as much. Maybe they may not get out entirely, but they cut back on it. They may sell from all those gains they made as they see it kind of going down or kind of going sideways or not gaining as much. And then they want a little bit more safety. So they go to the dividend paying stocks. Oftentimes, if it's stock company is paying a higher dividends, that means, they're pretty stable with their, revenue, with their earnings, and they know they can pay out this much, put this much back in the company, the payout ratio. You want to look at that, how much of a percentage of the earnings are a company paying out for their dividends. Now, when you have those companies, during market downturns, sometimes you'll see a little bit more gains with the dividend companies during the downturns or during the beginning of the, the rebound and things like that, because people are in those kind of driving up the price and, while going for those dividends, maybe reinvesting them, maybe using the cash, so you have that safety to dividends. And not saying, dividend stocks are safe from, being corrected or going into downturn or crash or anything like that. Not so much. Sometimes they will hold up a little bit better or a lot better than the growth focused companies. But yeah, a little buffer right there during market downturns, sometimes with the dividend focused companies and ETFs. Now, this dividend ETF is ideal for income focused investors who want growth with added stability. And now let's get into the top 10 holdings for the FDVV ETF. And first up here, we have Nvidia, then Microsoft, Apple, JP Morgan Chase, Broadcom, Visa, ABN AMRO Bank, Philip Morris, ExxonMobil, and Coca-Cola. So definitely some major companies right there. Starts off with Nvidia, Microsoft, and Apple. We see a theme going on here. I did not do that on purpose. It's just that's the way it is with those companies. They are just in a lot of ETFs, and a lot of times they're at the top of the holdings in a lot of ETFs. That's just what it is. People see the, the gains with Nvidia. They're like, I want a piece of that. Let's add it to this, more of that to this ETF. Microsoft, same thing. You want exposure to that. And Apple's Apple. And one point for a while, Apple was the largest company in the world based on, their market cap. I don't have this ETF personally. I have SCHD. That's kind of like my dividend ETF in that portfolio. The top 10 holdings in that ETF are definitely different than this dividend focused ETF. And so I am a little bit surprised to see some of the companies in this top 10 for FDVV, but they do all pay a dividend for sure. The dividend yields in a few of those right there aren't that high, Nvidia, Microsoft, Apple. Now, they can be considered growth dividend companies though. So that's another thing you want to look for with dividends, not just the high yield. You want to look at who's growing their dividend consecutively. Even with a small dividend yield, over time, that dividend yield is going to grow if that company is, doing that with their stock. So that's something that's can definitely happen and has been happening with those top 3 companies, is an increase in dividends. So I see reasons why it's in the top 10, and then also reasons why I'm like, well, I'm a little surprised, but not to say it shouldn't be or anything like that. They've been performing great. the gains are there. And the number of holdings, 121 holdings in this FDVV ETF. So not a ton of holdings. And when you see those percentages, you see like, 6%, 6%, 4%, 2%, 2%, 2% right there. So a lot of kind of like evenness right there. And even in the top 10, you have three outliers right there, NVIDIA, Microsoft, and Apple. But then you see kind of like a steady around 2% right there for many of the top 10. And it kind of course, is going to dwindle down, but not a ton of holdings in this one. So yeah, that is FDVV, the Fidelity High Dividend ETF. Let's move on to the next one. That is going to be the FDMO, Fidelity Momentum Factor ETF. Now the strategy for this one is US stocks exhibiting strong recent price momentum based on quantitative models. Expense ratio on this ETF is 0.16%. Now the performance of FDMO, 1-year return, 24.53%. 3-year return, 20.52%, and 5-year return of 15.69%. So double digits across the board, nice high double-digit returns for this ETF. Distribution yield, 0.82%. Now, why this ETF is great, it seeks to capitalize on upward trending stocks. So it adds a tactical growth-oriented edge to your portfolio. This ETF right here, it sees a stock getting hot. I'm sure there's other research going on with it as well for sure, but sees the price action in the stock, it gets in there. Of course, sometimes you're going to be earlier, sometimes you're going to be later, sometimes you're going to catch it in the middle. But if you track a stock with the hot price momentum, it's going up, you can ride along for those gains. Sometimes, I'm guilty of it even myself, of seeing a stock run real hot and thinking, man, I'm too late. I'm going to wait for a pullback. It's too hot right now. I'm going to wait for a pullback. And then you just keep watching the chart day to day, week to week, and there's no pullback, month to month, no pullback. And you're just like, if I would have got in when I said it was too hot, I'd be up double right now. So yeah, it happens. It's happened to me personally. And this ETF is going to try to, track that and ride the wave with it when those stocks have that hot price momentum. And this ETF is ideal for investors comfortable with short-term volatility seeking enhanced growth, because with those hot price action, stocks right there, sometimes the pullbacks are drastic, a little dangerous to shake people out sometimes, but those could be opportunities to, buy more into that stock or the ETF and so forth. So volatility can work both ways. Volatility can bring stocks down and volatility can move stocks up for sure. So let's get into now the top 10 holdings of the FDMO ETF. And we see some familiar names here, especially the top 3. Here we are again, NVIDIA, Microsoft, Apple, then we have Amazon, Meta platforms, Facebook / Instagram / WhatsApp. That stock has been phenomenal. Let me just tell you. But anyways, no tangent. Next stock in the holding here, Broadcom, JPM, JP Morgan Chase, Tesla, Berkshire Hathaway, and the Fidelity Securities Lending Cash Central Fund. So I have that kind of mixed there in the top 10. But you see right there, definitely tech focused and growth focused. I mean, even JP Morgan Chase, that's financials, bank right there. That stock has performed well in the past couple of years as well. This ETF, FDMO, 130 holdings. Those are the top 10 holdings for the FDMO. And one thing I wanted to note, and I put down here at the bottom, is that if FDMO's momentum strategy feels too volatile, consider a lower risk options like FDLO for lower volatility, FREL to add that real estate diversification, or FNILX for the broad large cap core holdings with zero fees. So I wanted to mention those right there because those are other ETFs that are Fidelity exclusive ETFs that could have made this list. If I swapped out one ETF here or there, and it may have been FDMO, may not, but these are what I consider these top 5 ETFs right here are for long-term growth and success. And for that growth, a lot of times momentum is one of the factors of it. So that's why it made the list. But I did want to mention those other ETFs because, like if you just stated, oh, I want some real estate exposure, real estate and the stock market, 2 great investments in the United States. Now, of course, with this video stating top 5 funds, that's not me saying like you should only have 5 funds in your portfolio, but I'm just trying to narrow it down. I don't want to make this video too long. And almost here to wrap up the video, I want to show you all on one screen the top 5 Fidelity exclusive funds that made my list for long-term growth and financial success. Here they all are right here with their strategy and their current expense ratio. And that is it, everyone, with my video on the top 5 exclusive Fidelity funds for long-term growth and success. Be sure to like the video down below and subscribe to the channel if you're not already. Much appreciate everyone that's done either one of those. Hope you all enjoyed the video. Take care.